I think one of the realities is that we're going to see more and more SaaS become free.
Yeah.
And it's going to be either the payments or the integration or something else that's going to generate the value.
With portfolio companies, and as we're looking at deals to invest in, is if the switching cost is purely that setup overhead, like that's been eroded now with AI.
Yeah. All right, so this episode format may be a little different to usual. We're sitting in San Francisco Airport in the Air France lounge. How we've managed to end up in the Air France lounge, I'm not exactly sure, but
Here we are.
Let's not waste the time.
Yeah. But we've just wrapped up our US mission with founders and investors over here for the week across San Francisco and into Denver. And it's been a bloody good trip. And we thought we'd share some insights into what we've seen this week and what we're thinking as we're heading home. I think for me, one of the first things that really hit me was how quiet the US feels. Like coming through LAX and it was completely dead, and look, that could have just been a random run, but San Francisco still feels very quiet through the week and on weekends. The tourist numbers seem down, and I'd say Denver as well seemed pretty quiet.
I think when you have a look at what's happening politically, there's a lot of people waiting just to see what actually occurs, and I think that is going to flow through. In a previous episode, I have stated that I think that the financial markets will provide a little bit of a stabilizing mechanism, because if everything that Trump is planning on doing rolls through, I can't see it not ending up in some form of recessionary thing. So we'll see what plans out. But yeah, it has been very quiet. But even though it's been very quiet broadly in terms of the tech and venture scene, it is incredibly fast.
Yeah, absolutely. I think there were a few people during the week actually who commented about almost like inevitability of recession in the US. There was also, I forgot what you said. You said something else there.
The speed at which the venture.
Yeah, just picking up on that, there were several people through the week talked about inevitability of a recession potentially. There were a lot of Aussies that are talking about returning home, and they're looking at, they're considering it. I wouldn't say they've decided, but there's a definite feeling of uncertainty over here. And lots of people talked about the uncertainty possibly affecting decision making.
But the VCs with money,
yeah, they're still
deploying at an absolutely rapid rate,
phenomenal rate. So, yeah, Silicon Valley Bank took us through the stats, and I think for me, the big takeaway from that, looking at the VC stats, was exactly what we've been talking about back home. This bifurcation of the market. The top funds are landing all the capital, and interestingly, back in 21, at the peak of the cycle, there were 8,500 VC firms in the US. That's now dropped by a quarter, down to just over 6,000 VC firms. But in that context, the top 10 actually got 45% of all the capital inflow. It's phenomenal when you think of that. And we're seeing this play true back home. The big funds, more and more capital. But we picked up a few conversations this week where investors and LPs are saying they just can't get access to those funds. And even an Aussie we caught up with over here this morning is like, if I'm seeing a deal, it must be shit. Because the top performers are landing the investments. And so we are seeing that bifurcation, and Silicon Valley Bank described it as, and this is based on fund, like cash flow data from the banks, showing that the middle of the market, the middle of the VC market is being eaten. It's being decimated. So we've thought this would play out, and it seems to be playing out.
Yeah, and for us, but I think what did stand out during the week was if you've got a differentiation, if you've got a differentiated story, then you're going to be okay. You don't want to be in the middle of the market. Otherwise, you just don't stand out.
Yeah, and for us, that's been great validation of our investment thesis this week. But universally, everyone understood our thesis, where we're playing, why we're playing there. But this conversation around emerging fund managers, where the future lies for LPs to actually gain decent returns and get access to good deals. So that was great validation for us. I'm heading home genuinely really excited about that, and our own fundraise with the Tribe Nexus Fund.
Yeah. What about from a founder perspective? What were some of the things that popped out?
I think the big one for me on the founder side are just the rate of growth. So the acceleration in how fast companies need to be scaling. So there's lots of conversations around, in this world of AI efficiency, companies raising less capital to get to high number ARR very quickly in a shorter time frame. And yeah, there's commentary like, unless if you're B2B and raising capital, you have to have hit your 1 mil ARR within 12 months was kind of like the entry metric to even be considered by local VCs.
And they've just got they've got such choice in this market. And I think you're not only going to hit those metrics, but you've got to be, those metrics actually have to be in the US.
Yeah.
They just don't care about outside of US money.
Yeah. Yeah. We've always known that the US worldview of things is just the US and limited understanding or appreciation of markets outside of it. But more so than ever, it seems like just completely discounting Aussie company revenue, and it's not just Australians, but any international revenue outside the US. They want to see revenue growth and traction in market in order to be eligible for investment here.
Yeah, I was talking with one founder who had one client locally and said, so yeah, that means we validated it. It's like, nope. You need to be able to demonstrate many clients. The challenge with the VCs over here being spoiled for choice is not only that they get access to really fast growing companies locally, they're seeing more and more fake product market fit where the company got its $1, $2, $3, $4, $5 billion ARR really quickly, only to lose it for various reasons. And so what you're seeing is a group of VCs that are even, yes, you've got to hit that initial metric, but they're going a lot deeper into some of the DD, some of the cohort analysis that we've seen this time. Like a few years ago, they were not going to that level that we're seeing today. But the sophistication of tools of looking at your cohorts of customers, looking at retention, looking at churn, looking at expansion, they've now got some very sophisticated systems. And if you can't conform with that, and if you don't have the data in that format and the ability to do it, they're just not going to engage with you.
Yeah, totally. And I think the other one for me was, and it feels when we were last here 6 months ago, even in that time, the TAM expectations seem to have multiplied. Like there are a couple talking about $10 billion TAM expectations for market sizing. So it is a different ballgame over here.
But the speed. So what was the acronym that we heard? We heard SHITS.
SHITS. So it's show high interest, then stall.
Yeah, SHITS. But I saw some of that high interest with a couple of the portfolio because we put them in front of investors to pitch. But the investors that really liked certain ideas, they grab them with both hands and they really push forward and they get them in front of the teams and they start talking term sheets. But what that does mean, if there isn't that speed, you don't actually have interest.
Yeah, and that's such a good point for founders to realize. Like, to put it in context, one of our portcos is on the mission with us and had met a local VC that came to talk to the group on the Monday. That person came to our dinner on the Monday night, and by the next day there was already a conversation around potential raise. And before even the end of the week, they had a couple of discussions and we're talking about term sheets and a deeper combo. And that rate of moving fast is what you should be experiencing if it is a yes or a likely yes. And the reality is over here, everyone's like, they speak in hyperboles, they're super excited. And you can, as an Aussie, think that there is genuine interest when really there's not. And so unless things are moving at that pace of not just meeting cadence, but actual execution, like they're following up, you're getting docs done, you're almost at signed within a week, it means it's a no.
Yeah, no, absolutely. What else do we have on the list here? Yeah, a couple of other just reflections with some founders that I was talking with. You've got to be careful not to look too much at the world the way you want it to be. And with some of the conversations at the product level, talking about how they want the world, how their product could solve a particular problem. The problem is that the US people and the US system don't think in the manner that the founder was talking about. And so what that can lead to is you just never find product market fit because you don't connect your product to the actual reality on the ground. And you've got to be very careful that if you need an entire market to change to your way of thinking, at very least, that's going to be an incredibly slow growth rate. And at worst, and what normally happens is you never get any traction because your message doesn't resonate. Now, you may have a better way of doing things and you may have a better outcome, but you really need to, from a messaging point of view and a starting point of view, start with the way the world is, get some traction, get some relationships, and then try and convert them to your way of the world. But yeah,
is one should. I think for me, it is that reminder that the US is a capitalist economy and they are commercial beasts. They want to know the numbers. How does this affect my bottom line? Like unless there is some direct benefit, they're just not interested.
The airy fairy doesn't fly.
No. So you have to be able to meaningfully demonstrate and articulate like a real commercial proposition. Otherwise, it's just not going to cut it. And something that's really interesting on that for me, coming to the US a lot over the last 15 years and always wondering, why are the products so shit by comparison to Australia? Like Craigslist is a great example. The worst interface on the bloody planet. How, like in this country where there's Silicon Valley and all these tech unicorns, and I've often wondered that disparity. But what I found the words to articulate at this trip, which is small markets make better products because the market is so bloody small. You have to have a quality product, and you're also trying to please so many customers because the market is so small. You chase every dollar of revenue, put that new feature into the product to satisfy that next client and get that next customer. Whereas over here, the market is so big, you can have a shitty product and even be shitty at execution and still have a significant business. And it's that great reminder that Australia is a fantastic breeding ground for quality ventures, but they have to scale into bigger markets. And when you do, you really have to almost like narrow down. Like one of our portcos on this trip is talking about just taking to market over here a narrow subset of their feature base of what they have in the Australian market, because the industry here isn't as advanced as it is back home. And to go broader requires too much mixed messaging in their go-to-market. They're going to lose focus and they're not going to convert. So big markets, you have to be very super niche, not just in your ICP, but in your product itself as well. And I've got more clarity on that this trip than ever before.
Yeah, no, that's a good one. What else you got on your list?
I'm trying to remember.
With AI, the AI presentation that we had was really interesting. 6 months ago, we had a session that really blew our mind, but we ran home, we implemented some changes, we put on Duncan to work with the portfolio, and some of us internally, like I felt this time on some of the basic stuff, we were actually, I think, in a good position. But the presentation we had this time from someone within a large VC really drove home some of the business models that are coming. And I think one of the realities is that we're going to see more and more SaaS become free.
Yeah.
And it's going to be either the payments or the integration or something else that's going to generate the value. But what they demonstrated to us is a number of situations where they're going in and providing a vertical solution, especially in medtech and some fintech stuff, where actually the SaaS that used to have an ACV of 5,000, 10,000, 50,000 is being given away for free. So then that way we have the data and the ancillary things to put on top of it. And if that plays out, wow, that is going to change a lot of business models. And I don't think a lot of companies are going to be able to make the pivot.
Yeah, I think that trip last year, the education and the mental model we walked away with around AI has been fantastic. And coming into this trip, same reflection as you, I feel like I feel like our thesis has been validated. And we've talked on lots of the podcast episodes around, I dropped that line, SaaS is going to zero. I think to better articulate that, it's recurring revenues for a pure play SaaS product where there isn't some other value accruing is going to be under pressure. And I loved the conversation this time and that insight around what constitutes truly proprietary data that may offer the opportunity to be monetized in some other way. And therefore, if you own the application layer, which is essentially collecting that data, and the value accrues somewhere else in the chain, and you can actually realize that or monetize that in some way, it then makes sense to do the land grab. Give away your software for free, capture all the data. Now, there's lots of assumptions in all of that, but I see that's the direction we're generally heading in.
Like in this instance, he was showing us an ERP/CRM in a specific health niche where they had like 2 or 3 systems already paying for. What happened was these founders built a system that handled everything vertically, gave it to the operations for free, and where they make money is through the throughput of volume on the platform. And so you've got these existing platforms inside these health businesses that are now going to get thrown out. You've got a new platform that's far more vertical, taking into account 5 different layers of the value chain that they're not being charged for the SaaS component. And they effectively now get a variable cost where they pay a very small amount on the payment processing.
Yeah.
And now what is allowing that as well, the new SaaS company has been built using AI tools. It's got these little AI agents that make it all that more efficient. The business itself is far smaller and can run on far less income and still have a good, fast-growing business.
Yeah. Yeah, capital efficient businesses, growing revenue faster, and potentially offering their SaaS product for free to capture data. I think that was a great insight around that model. I think the other thing for me, like when you and I caught up with the partner at Google Ventures, and
Yes.
amongst that entire conversation that you was talking about their investment thesis, and it was probably one of the few VCs this week that actually even talked about SaaS. But I think that conversation hasn't got back home. Like I look at what most VC funds in Australia are still investing in.
I'm not so worried about just the pure play SaaS. I think the issue is that there's still a lot of investment going into pure play that isn't very vertical.
No,
That still leaves. So if we look at our example,
yeah, that's an important nuance.
we are moving, what is it? Fund management software.
Yeah. Yes.
And our current fund management software, we've only had for 18 months. We were quite happy with it. But in comes a new tool that's far more vertical that takes like another 5 steps and then leverages AI that imports documents automatically like you've never seen. And it's cheaper.
Yeah.
Right? And the incumbent that we're with at the moment doesn't have a hope in hell retaining it.
Yeah, I think that's a big one for me. Actually, was pre this mission. We talk about switching costs as creating durability. But if the only switching cost is the onboarding process, with AI, companies are now just completely destroying that.
Yeah.
And this particular investment management platform we're looking at, the fund management platform, the onboarding process is literally they give you a folder. You drop all your docs, legal docs, files, Excel, whatever, into that folder. And the AI goes and actually extracts all that data, sets up all your registries, sets up all your processes, sets up all your docs, and does everything without touch of a human. So I think about this with portfolio companies, and as we're looking at deals to invest in, is if the switching cost is purely that setup overhead, like that's been eroded now with AI.
Yeah. And that's where part of our investment thesis is always around durability of switching costs. Switching costs are getting very low.
But this is why we love things like software wrapped in plastic, like hardware, IoT, physicality. And one of the little expressions I heard this week, which describes exactly what we love, is we invest in atoms and bits. And I love that because I love that combination.
And it's almost like marketplaces are coming back a bit.
Yeah, that was really surprising. Like Google Ventures was talking about investing in marketplaces.
But even ourselves have looked at the things that we're looking at where SaaS is actually becoming sticky because it's creating a revenue opportunity for the user.
Yeah.
And if you get an environment where you're not only giving them the SaaS and there's a stickiness there, if you're also improving their bottom line because you are forcing revenue into them as well, then if you think of stickiness and durability, that is something that's to be excited by. And if a better mousetrap comes out, a better piece of SaaS, you then generally will have a little more time to innovate if you've giving your customers revenue at the same time.
Yeah. Yeah, absolutely. I think as much as there were new things this trip that we've been talking about, there's a lot of things that are staying true.
Yeah.
Like US market is about your distribution partners. It's about your channels to market. It's not so much in the B2B sense. It's not direct selling. It's leveraging the big, massive conferences that are industry specific and attending those. There is still that relationship-based element where you have to build trust in market, but all those things so true, the speed, the conversation, for Aussies, you have to get comfortable talking about your aspiration and the scale of your ambition, because if you don't have that, they write you off. They don't take you seriously and they don't see you as a big enough opportunity to be engaged with. So all those things have stayed true this trip.
I think it was good because we're talking to a few people that I certainly came out of the meeting feeling like a fucking idiot. It's good to be humbled from time to time from an American that looks down their nose at you as if you're some kind of moron that should be institutionalized. So that was nice.
Yeah, that was really nice. It is funny, like that experience when someone arrives late and leaves early, but it is equally very encouraging and tells you to go do it and it's going to be amazing. But reading between the lines, it's like they think you're an absolute dickhead.
I think the other thing that just on this trip, part of the difference between like the founders that have real hustle, a bit of irrational exuberance, and the ones that you just get a sense they have to win.
Yeah.
Like this, they have to win. If I think of the group, there were those that were like passionate, but were maybe missing the have to win bit.
Yep.
And you could really tell the difference. Now, sometimes the have to win bit doesn't come from a place of healthy, and that can lead to some bad outcomes as well. But if you have that combination of good taste in decision making, good ability to get things done, good understanding of the market, and this underlying drive, I have to win, I just really could see the difference in this trip.
Yeah, look, it's something we probably talk about more at the growth summit, the offsite retreat, but having just the right size chip on your shoulder.
Yeah, that's it. You need like the right type of
the right
problematic personality to...
Those founders that are really driven. And that was an interesting one at VU Ventures and asking Skylar about what do they look at when they invest. And he's like, it's all about the size of the market. And if you have a big enough market, it doesn't matter about the rest. But then when asked what was the most surprising thing he's learned being an investor, it was, when the founders have already had success and they're not motivated anymore. So it all came down to the team. Yeah. Yeah. So I think
that's circular, right? Like,
it is,
okay, depend on if you've got the deal flow that you can go after $1 trillion markets, fine. Yeah. That's like the top filter.
Yeah.
Then is this team the one to do it? If those two things line up, then move to the next step. Yeah. But if you're going after really big markets and the team doesn't line up, like that's not going to work either.
Yeah. All of these things are required, but not sufficient.
Perfect time for the vacuum to come through. That's all right. I'll edit it out.
I'm trying to think if there were other things from the week that we haven't hit. We talked about those.
Well, let's think forward. Landing back in Australia, what are we going to do?
I'm feeling pumped on the back of this trip. Often I feel a little depressed going home, but I'm feeling pumped for our fund. I have building... It's almost like an endless building conviction on what we're doing. And I think this trip has just reinforced our investment thesis for me and the opportunity. So I'm super excited to go back and be formally kicking off the fund launch.
Yeah, absolutely. I think we do have to double down our efforts on AI with the portfolio. And it's not just AI in terms of the tools, but it's AI in terms of the business model.
Yeah.
Last trip was all about the tools and the efficiency and new opportunities. Actually, this trip is about the business model and actually I think we have to almost do the pre-mortem type approach that we do with portfolio around their operations, but do it like if you were to get killed by somebody coming in, this is why you died. And from a business point of view, a business model point of view, really getting out on front to make sure that you're the disruptor, not the disrupted. And so I can see with the portfolio, I'm just going through my head, there's just a number of conversations there saying, okay, not saying we have to turn everything on its head tomorrow, but what we're seeing on the horizon back in the US.
Yeah, I think that's an awesome point. That mental model we've developed on AI, coming back from the last US mission, we were applying to products and individuals, but I think now applying that to an industry. If those things are true, play out that mental model, what does the future of this industry look like? And then working backwards from that. Like, how can these companies start thinking and being ahead of that curve?
The other thing that we haven't discussed, actually, now I think about it, is that I'm pretty sure deal flow is going to zero.
I think so. I am 100% convinced.
When you have a look at what's happening at the data-driven level here, we thought we were ahead of the game. We're probably a little bit ahead, but when you have a look at what's happening and how this market goes about it, deal flow is just going to be so ubiquitous everywhere.
Yeah.
And therefore, the ability to add value early and be the chosen investor. Yeah. But I think over time, brand is going to get eroded.
I totally
And there's already stories of big VCs now going and sitting in the reception of the company and refusing to leave until the term sheet is at least viewed, at least looked at. They just send someone who just sits in the office to fight for the deal.
Yeah. Well, when I think of the 5 things a VC has to do, like they've got to see deals, they've got to pick the winners, then they have to actually win the deal.
Yep.
Then they have to support them, and then they have to exit them.
Yep.
That early part is absolutely getting commoditized. Like, I think we were ahead of the curve with the tools we're developing, but then looking at now the number of companies that are building to do exactly that for VCs globally, that means everyone's going to have access to the same deals, same line of sight. So for me, it becomes, how do you win the deal that others can't?
Absolutely.
That's the piece. That's the game. And so I feel like we've been ahead on that curve, and it's part of our strategy. But like we know, this game changes fast.
But life's going to be, that's why we've got to maintain our niche. Like we kept getting asked questions on, why don't you look at this company, look at that company? The broader you go, the harder I believe it's going to be.
Totally.
Whereas if we can absolutely own the niche, own the leverage, own the community of founders in that particular space. That we will never be a sole investor, but get recognised as someone to be on the cap table if the company does these things and wants to go and do these other things.
Yep.
That's what we've just got to concentrate on.
Yep, absolutely.
The other thing we'll do when we get back is I need to buy a watch because I left my watch on the flight over.
Wait, Les, can we just...
we've got an
offsite, actually, in not too long.
Yeah, we've got an offsite at the end of May, which I'm really looking forward to. The Tribe Growth Summit, which is going to be Northern New South Wales. This time it's going to be a little bit interesting because we're actually going to have Duncan there, and we're going to do a bit of pre-work for the participants and actually have a session trying to help build your actual agents. So for those that are a little bit behind on the curve, we really want to try and look at the business and say, okay, here's some things that are off the shelf you could go and deploy. We've got an event with Adrian DeMarco around my fire pit.
Yeah, that's also in May.
We're going to get that out.
Yeah.
So for people in Queensland or those that want to fly up, and if you fly up, we will accommodate. I'll accommodate you for free in the caravan.
And then we head to London in June and back to the US in October. So, and in between, like the realization, you and I will be traveling more, no doubt.
Yeah.
Yeah.
You know when the best time is to build a business? In your 20s and 50s.
Well, no, it's good. Not when you've got young kids at home.
But we had some meetings before we left with some investors who just got the thesis, actually said, accept your traction.
Yeah.
We're really engaged and are ready to invest.
Yeah.
And that gave me a lot of energy. You obviously have your supporters, right? So we've got a core group of LPs and a core group of investors and love them dearly. But when you start spreading your wings and you start working with others that haven't worked with you, who then say, yep, I get it, I'm in, I like it.
I think the energy that comes from meeting someone for the first time that you've had no prior connection with, sitting down and explaining your investment thesis, everything you do, answering all their questions. And by the end of the meeting, they're talking a $2 million check into your fund.
Yeah.
That gives you a certain energy. And I'm looking forward to getting back and having a couple hundred more combos like that.
And then because of the time zone, was able to spend a little bit of time working on our marketing automation.
I'm impressed.
Well, so far, 2 posts, 2 for 2 have been removed due to spelling errors.
Well, yeah.
So
I'm not gonna say anything bad because I just want encouragement. You did well.
But I'm hoping people will notice because we now have like 140 scheduled posts. We created 19 new videos whilst we're here.
I love that you're saying we. Like you led all that. You did all that.
You were the meat. You were the talent.
I just stood and yapped.
But you do. Somebody on Facebook, I can't remember, not Facebook, LinkedIn, said that you missed your calling as a TV presenter.
Oh, that was
you
Laura.
Do have like AFL sideline vibes.
That was Laura from RCL. Thank you, Laura. Yeah, I did actually listen. So Don was editing all this while we're working in the hotel lobby, and I kept hearing my own voice, which was painful. I'm like, I sound like a footy commentator on the sideline trying to yell over the crowd. Anyway,
if you run off often enough, you're sure to win. All right, let's leave these good listeners.
Yeah.
I might, at the end here, just drop a couple of videos from the participants.
Actually, that's a good idea.
Just in their own words, what the trip has been like.
Yeah, I'm a convert, so I've already scheduled my UK trip. So I don't know how else I can give a positive review other than to say that it blew my mind the depth we went to with investors on this trip and the level of interest in the whole cohort from American investors, frankly, should give any Australian founder a pause not to come here immediately and engage, because they may find that investors are materially more interested to be engaged and involved than what we see in Australia. And that was very powerful. Also being able to then look at the different ways to engage in the market, how to not be Australian, but be able to pitch in a more American way, I think has allowed all of us to engage with these investors more effectively. So the good thing about Tribe is that they're always hitting you from different angles that you don't expect. Sometimes you like it, other times you don't, but it's good for you regardless. So I can't be anything but grateful for the experience, and I look forward to the UK, and I look forward to doing this again next year.
I loved the Australian Aussie panel. Nice and raw, giving us what they really think, a few tips here and there, what not to do. I thought that session was awesome.
I reckon the 5 Aussie founders who've come and been successful here, because it's just obviously all the other panels are so, well, all the other sessions are so informative and interesting, but actually seeing, that success and being able to, be inspired by it, I think has been my favorite.
Sasha yesterday talking about AI was quite impressive, looking at some of the future expectations of where it will go.
The deep dive into AI was also really interesting and eye-opening and brain-exploding.
I came in on Thursday, Friday had meetings, picked up our first customer, built up all sorts of different conversations, and the openness here, next level. I haven't experienced it like this in Australia, unfortunately, but we'll take this learning back and do the same thing, I think.
We had a dinner last night. It gave us an opportunity to sit close and talk one-to-one with investors and people in the startup ecosystem. That was incredible.
So the sooner you come here, the better, and definitely recommend it through this trip.
Awesome.
All right. See you, fella.
Thanks.
Bye.
Bye.